Welcome back, everyone, for another deep dive. This time, we're going to be taking a look at the euro area. Specifically, we're going to be looking at financial integration within the euro area.
All right.
And we've got this fascinating research paper to guide us called Geography of Capital Allocation in the Euro Area.
Yeah. And honestly, it's got some pretty surprising findings.
Okay.
We might think that the euro area is really financially integrated, but it turns out that might not be entirely true, especially when it comes to investments,
Right.
like where that money is actually going.
Mm-hmm.
And what's particularly interesting is the role that certain financial centers within the euro area itself are playing.
That's right, yeah. And the paper highlights what they call onshore, offshore financial centers.
Offshore?
Yeah.
What is
They call them OOFCs for short.
OOFCs, yeah.
Okay.
And we're talking about places like Luxembourg, Ireland, and the Netherlands.
Okay, so these are countries that are part of the euro area, but they also function as these major financial centers that attract investments from all over the place.
Exactly. It's almost like a hybrid. They have this dual role. On one hand, they're part of the euro area, but then they also act like these offshore financial centers in a way, attracting investments, managing those investments, and facilitating all sorts of financial activities.
So they're wearing two hats.
Yeah, exactly. Two hats.
But how does that impact this whole idea of the euro area's financial integration?
So they play a really important role in two key ways. First, they manage a massive amount of investment funds.
Okay.
So think about these huge pools of money that are then being invested in various assets around the world. And second, they facilitate the issuance of securities for companies.
Okay.
Both within Europe and even globally.
Okay.
So many companies choose to issue their stocks and bonds through these centers.
Okay, so if we have all this money and all these activities happening in these OOFCs, doesn't that make it really hard to track where that money is actually coming from and where it's going?
Exactly. And that's one of the main challenges the researchers try to address in this paper, to kind of look through the complexities of these OOFCs and actually uncover the true investment landscape.
So they're like financial detectives.
Yeah, exactly. They're trying to trace the money.
Okay, so what did they do? Did they have to break into secret bank accounts or something?
No, not quite like that. But they did use a pretty clever approach. They used two main methods to get this clear picture. The first one they call fund unwind.
Fund unwind.
Yeah.
Okay.
And essentially it's about tracing back those investments.
Okay.
So let's say you invest in a fund in Luxembourg, right?
Okay.
And that fund then uses your money to buy stocks in a company in Germany. To unwind this, we need to trace your money back from that fund to the actual company in Germany.
Okay.
So you see the real flow of investment.
Got it. So it's like peeling back the layers to see where that money actually ends up.
Exactly, yeah.
Okay, that's the first method, fund unwind. What about the second one?
The second approach is called nationality adjustment.
Nationality adjustment.
And it's all about determining who reelable owns the companies that are issuing those securities.
Okay.
Because a lot of companies might issue bonds or stocks through an OOFC, but their parent company might be somewhere else entirely.
Yeah, I see.
So nationality adjustment helps us see past this, this maybe slightly misleading location.
Okay. So they're using these two methods, fund unwind and nationality adjustment, to kind of put together the puzzle pieces
Right.
of the euro area's financial system.
Exactly.
And what did they find?
Well, their findings challenge some of the common assumptions about how integrated the euro area really is financially. Like, for example, the research shows that the euro area's global integration may be smaller than what official data would suggest.
Wait, so you're saying the numbers are lying to us?
Well, maybe not lying, but they might not be telling the whole story. Because a big chunk of those holdings, those fund holdings, in OFCs, particularly in Luxembourg and Ireland, they don't actually belong to residents of the euro area.
Interesting.
It looks like the euro area is deeply invested in the rest of the world, but a good portion of that money is actually coming from outside the euro area.
So it's like a financial mirage. We think we see one thing, but the reality is quite different.
Yeah, that's a great way to put it, yeah.
Can you give us an example of how big this difference can actually be?
Absolutely. Let's look at bonds. Official data might say that the euro area owns 6.1 trillion euros in bonds issued by entities outside the euro area.
Wow, that's a lot.
Right. But after adjusting for these ORFCs, the real number is closer to 3.4 trillion euros.
That's a huge difference.
It is, and it's a similar story with stocks. Instead of owning 4.2 trillion in non-euro area equities, the actual number after adjustment is closer to 2.8 trillion.
So we're talking about trillions of euros here.
Yeah.
And that means our understanding of how interconnected Europe really is could be totally off.
Right. And this matters because it changes how we assess risk. Like, if we think that the euro area is more invested globally than it actually is, then we might underestimate its vulnerability to any problems that originate within the euro area itself.
So this isn't just about numbers.
Right.
It's about understanding the real connections and the dependencies within the global financial system.
Exactly, yeah.
Okay, so we've seen that the euro area's global integration might be less pronounced than we thought.
Yeah.
But what about within the euro area itself? Did this research shed any light on that?
It did, and this is where it gets particularly interesting. One of the key measures of financial integration is something called home bias.
Home bias?
Yeah.
What thing?
So it's this tendency for investors to favor assets from their own country, even when they're within a shared currency zone like the euro area.
So even though they're using the same currency, investors still prefer to keep your money close to home.
That's right, yeah. I mean, it could be driven by familiarity, a perception that it's less risky, or a bunch of other factors. Now, the official data actually shows a very sharp decline in home bias after the euro was introduced, which seems to suggest that the single currency led to much greater financial integration.
Oh, okay.
But here's the thing.
But I bet those OOFC adjustments come into play again, right?
Exactly, you're absolutely right.
So you're saying the euro's impact on financial integration might not be as clear-cut as we initially thought.
Yeah, that's what the research seems to be suggesting. Once we account for those OOFCs, we get a different picture. The decline in equity home bias, it's still there,
Okay.
but it's much smaller than we thought. It seems that that initial really sharp drop was, in part, an illusion created by these complex flows through OOFCs.
So maybe the euro wasn't the magic wand for integration that everyone hoped it would be.
Maybe not, but there's more to the story. What about bonds? We see a different pattern there.
Okay, so we have equities maybe not being as integrated as we thought, but what about bonds?
Well, bond home bias genuinely did decline in the euro area after the euro was introduced.
Huh.
So it seems like the bond market, at least within the currency union, did become more integrated.
So we're seeing a bit of a mixed bag.
Yeah, that's right.
Equities might be less integrated than we thought, but the bond market actually seems pretty solid.
Right.
It makes you wonder what else this research might have uncovered about these flows.
Absolutely. I mean, think about it. The researchers also found a shift in which countries are channeling those investments into OOFCs.
Oh, okay.
Like, for instance, Switzerland's role has actually decreased,
Interesting.
while the United Kingdom has become a major player.
The UK.
Yeah.
So even though they're not part of the euro area anymore, they're still really involved in all of this.
That's right, yeah. And it seems like they're largely acting on behalf of global investors, not just euro area residents.
Wow, that's fascinating. So the UK is like a financial bridge between the rest of the world and the euro area.
In a way, yeah. A gateway for international investors who want access to the euro area through those OOFCs.
So we're just getting started here, right? Because this research actually delves even deeper into the specific types of investors who are using those OOFCs.
Right, and that's where it gets really interesting because we start to see just how diverse those investment strategies really are.
Okay, I'm hooked. Let's take a quick break, and then we'll dive into that mysterious world of investors.
Okay, so we've got these OOFCs channeling all sorts of investments, and the UK's emerged as this major intermediary.
All right.
But now things get even more interesting because now we're going to dive into the actual investors who are using these OOFCs.
Right, and what the researchers did is they basically broke down those investors into three main groups.
Okay.
So first, you have your direct holdings by euro area residents.
All right, straightforward.
Yeah, so that's pretty simple. It's basically individuals or institutions in the euro area investing directly in assets.
Okay.
Then you have indirect holdings,
Okay.
which are still investments from euro area residents, but they're routed through those OOFC funds.
Okay, so there's an extra step there.
Yeah.
And then the third group.
And lastly, you have what they call rest of the world holdings.
Rest of the world.
So these are investments made by people outside the euro area,
Okay.
non-residents, and they're also being channeled through those OOFC funds.
Okay, so we have three different groups, all using the same OOFCs.
Right.
But are they actually investing in the same way?
Well, that's the question the researchers wanted to answer. And what
Right.
they found is that those portfolios, those investments, are surprisingly diverse.
Really?
Yeah, so even when going through the same OOFC, those groups, they favor different assets.
Huh.
They even favor different currencies.
So just because they're using the same financial center doesn't mean they're all doing the same thing with their money.
Exactly,
Yeah.
yeah. It highlights how diverse those global investment strategies can be.
Okay, so I'm starting to see how complex this web is.
Yeah.
Can you give us like a specific example? How are these investment patterns different? Yeah, so one interesting observation is that even when investing indirectly through those OOFC funds, your area residents still display a strong home bias.
You mean they're still investing a lot in their own countries?
Exactly. They still tend to favor securities issued within their own countries.
So they're going global, but also kind of staying local.
Yeah, in a way.
It seems like familiarity and maybe a perception of lower risk are really strong factors.
They could be, yeah.
But what about those rest of the world investors?
Hmm.
What are they doing differently?
Well, they tend to be much more diversified in their investments.
Okay.
You know, they're not putting all their eggs in one basket, so to speak.
Spreading the risk.
Yeah, exactly. Like, for instance, when it comes to currencies, you know, euro area investors, they largely favor bonds that are denominated in euros.
Yeah.
But the rest of the world investors,
Yeah.
they hold a much more balanced portfolio. You know, they have significant amounts in US dollars, other currencies.
So they're hedging a little bit more, protecting themselves against any potential risks in the euro.
It could be. Yeah, and it shows how different those perceptions of risk can be,
Yeah.
you know, for investors inside and outside the euro area.
Okay, but let's talk about the UK.
Okay.
We keep mentioning them as a major player,
Yeah.
channeling those global investments. But who are these mystery investors they're representing?
Right. Trying to figure out who those rest of the world investors are is really tricky.
Yeah, it's like a financial mystery novel.
It is, yeah. You know, you have data limitations. These investments pass through multiple layers, like different financial intermediaries, so it's really difficult to trace.
So are we talking about, like, secret societies moving money around?
No, not exactly. The evidence actually suggests that the UK is taking on a much bigger role in holding and managing wealth for investors outside the UK,
Okay.
and then investing those funds into OOFCs. So they're not just investing their own money, they're managing money for others.
So they're like a global financial concierge.
Yeah, you could say that. They're handling the investments for wealthy individuals and institutions around the world.
But couldn't this be a way for euro area residents to kind of hide their wealth, like to avoid taxes or something?
Yeah, that's a good point. It's a question the researchers considered, but they argue that it's unlikely.
Okay.
Because, for one thing, the UK has these strong transparency agreements and information sharing protocols with the euro area, which makes it much harder to hide money.
Makes sense.
And plus, if euro area residents were trying to be sneaky, they'd probably choose a location with weaker financial regulations.
Right.
It wouldn't make sense to go through the UK, which has more scrutiny.
Okay, that makes sense. So if it's not primarily euro area money being routed through the UK, then who are those rest of the world investors?
Right.
Any clues about their identities?
Yeah, so one interesting clue comes from the types of assets they're holding through those OOFC funds, because their portfolios look quite different from what we know about typical euro area investor preferences.
Interesting. So what are they investing in that's so different?
Well, let's take currency, for example.
Okay.
The study found that a significant portion of the bonds held through Irish funds by those unidentified investors are denominated in British pounds sterling.
That's sterling.
Yeah, and that's pretty unusual for investors based in the euro area who, as we discussed, generally prefer bonds in euros.
Right.
So it seems like they're not just using the UK as a gateway, they're actually investing in UK assets as well.
So maybe they have closer ties to the UK economy, or maybe they're even based there themselves.
That's possible. Yeah.
What else do we know about their investment strategy?
Well, overall, it appears much more globally diversified compared to the more Eurocentric view of many euro area investors.
Okay.
So it points toward a genuinely international mix of investors,
Right.
potentially from various regions,
Okay.
each with their own risk appetite and goals.
That's like this global financial melting pot. Money flowing from all over the world, converging on those OOFCs,
Right.
and then being spread across different markets.
Yeah, that's a good way to put it.
But to really understand the implications of all this,
Yeah.
it's helpful to see how it plays out in a specific country, right?
Absolutely. And that's why the researchers decided to take a closer look at Italy.
Ah, Italy. Always a fascinating case study.
It is.
especially when it comes to finance.
Mm-hmm.
So what did they find when they zoomed in on Italy?
Well, they found that officially reported data might show Italy with relatively low investments in certain countries, for example, China.
Right, because those investments are going through OFCs,
Exactly.
not directly from Italy.
Right. So just like we talked about earlier, that illusion of global integration.
Mm-hmm.
But once you apply those adjustments and you factor in those indirect investments that are flowing through OFCs, Italy's position in those countries can increase significantly.
So their financial ties are much stronger than they appear at first glance.
Exactly.
This really highlights the importance of looking beyond those surface-level numbers.
It does. And these corrections aren't just about getting the numbers right.
Mm-hmm.
They have real-world implications.
Yeah.
Because for policymakers and for investors, accurately assessing global risk exposures and understanding the financial linkages between countries, it's crucial.
Absolutely. It's like if you're trying to navigate through a maze,
Mm-hmm.
you need a good map.
Right.
And these adjustments are adding crucial details to that map, showing all those hidden connections.
Yeah.
Okay, but before we get too lost in this financial maze, let's step back and recap what we've learned so far. Okay, so we've seen that the euro area's financial integration is a lot more complicated than it might seem at first. Those OFCs, the role of the UK,
Right.
all these different investors with different strategies.
Yeah.
It's a lot to take in, but where do we go from here? What are the big takeaways? What questions should we be asking ourselves moving forward?
Well, I think the first big takeaway is that we need to be really careful when we're looking at data about the euro area's financial integration. Because those OFS, they can really distort the picture. We really need to dig deeper to understand what's going on.
Yeah.
Like we've seen both globally and within the euro area itself, the level of interaction may be less than we've assumed.
It's like those optical illusions where your brain tricks you into seeing something that's not really there.
Exactly.
We need to adjust our perspective a bit.
Yeah. And the second takeaway is that we can't just look at these like overall trends in financial integration. We need to break it down
Okay.
by investor group, by asset class, even by currency.
Yeah.
Like remember that example with home bias. The story can change a lot when you start looking at those specifics.
So the devil is in the details.
Yeah.
But why does all this matter? Why should we care?
Well, it matters because it affects how we understand the whole global financial system works.
Okay.
Like how interconnected we all are.
Yeah.
Like take that example with Italy. If we don't account for those indirect investments going through OOFCs, we might underestimate Italy's exposure to risks in other countries. And that could have implications for things like interest rates, exchange rates, even the overall stability of the financial system.
So it's not just numbers on a spreadsheet.
No.
This has real-world impacts.
Exactly, yeah. And finally, I think this deep dive shows just how important certain financial centers are becoming in shaping those global investment patterns, like the UK. Even though they're not part of the euro area anymore, they're still this major intermediary connecting investors all over the world to opportunities in Europe.
It really makes you think about what that relationship between the UK and the euro area will look like going forward.
Yeah, definitely something to watch.
They may not share the same currency, but those financial ties are there.
Yeah, absolutely.
This research has been really eye-opening, and I
Yeah.
feel like we've only just scratched the surface. What would you say are some of the biggest questions that we should be looking at as we move forward?
Well, one of the most pressing questions is understanding what's driving these very different investment patterns across those different investor groups.
Yeah.
Are there specific regulations, tax incentives that are encouraging these flows? Or are there even deeper, cultural factors at play?
Interesting.
Once we understand what's motivating these choices, we can start to think about how those patterns might evolve in the future.
Yeah, and what would that mean for economic policy?
Right.
Like, if the euro area's internal integration, particularly in equity markets, isn't as developed as we thought, what should policymakers be doing?
Right. So maybe they need to rethink their approach to promoting that further integration.
Okay.
Maybe a more targeted approach would be better.
Yeah.
Focusing on specific sectors, or maybe addressing some of the underlying structural differences between those member states.
So there's no easy answer.
No, definitely not a one-size-fits-all solution.
It sounds like the path toward a truly unified European financial market is still very much a work in progress.
It is.
But this research provides a really valuable roadmap, highlighting the progress we've made, but also those challenges that lie ahead.
Yeah, I completely agree. And I think that's the beauty of research like this. It lets us constantly challenge what we think we know and understand about these incredibly complex systems.
Yeah.
Like global finance.
It gives us a new way to look at things.
Yeah.
And it encourages us to keep asking questions, keep exploring those different perspectives, and never settle for those simple answers. This has been a fantastic deep dive, and I feel like we've all learned a lot.
Me too.
To all our listeners out there, keep diving deep and stay curious. We'll see you next time.